Ines, I remember when Greece was all the rage, they were expecting it to go bankrupt, and somehow it's turned this around.
Yeah, you remember those riots that were going on because of austerity measures back in 2012, the debt crisis that Greece was going through. Well, this is the first time that Greece's credit rating is raised by one of the big three assessors since more than 10 years now. And by the way, the big three assessors being S&P, Fitch, and Moody's. And in this case, as you had mentioned, S&P raising its credit rating to a stable outlook on Greece, lifting the nation out of junk territory. This follows some overarching themes. June's re-election of Greece's reformist prime minister, his initiatives, and also his promises, including reducing the country's debt versus GDP. And the S&P statement as to why they did this reads, significant budgetary consolidation has placed Greece's fiscal trajectory onto a firmly improving track. They go on to talk about a very rapid economic recovery. This is very important because the Greek government expects its economy to expand by 2.3% in 2023 to 3% in 2024. Tourism at a record high. The country has been booming with investments as well. Goldman Sachs recently talking about capital expenditure in Greece, capital formation, as it's been building its productive capacity, more plants, more machinery. You've got Microsoft, Pfizer that have been investing in Greece. So the economy has been booming. And all of this has been positive for Greek bonds. Greece's bonds are now the best performers in the euro area. Its 10-year government bond is yielding at 4.3%. By the way, back in 2012, that 10-year government yield, the government bond was at 41% back in 2012. It's down now to 4.3%. Remember that bond prices and yields move inversely. So as investors want to now buy more government bonds, Greek government bonds, this is more positive for the country. It's just more positive for investment. The cost of borrowing is less expensive in that case, and the economy is booming. A real turnaround from what we saw back in 2012.